All right, welcome to Coffee with Marcus and Mark, the #1 stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Friday, June 2nd, and we have a lot going on. Stocks move higher as the debt ceiling bill passes. Lululemon and MongoDB rally. The Nasdaq is on its way to its 6th winning week in a row. But then also today, the May jobs report came out. And we got to take a look at this because it was really, really surprising. Plus, some of my options positions are expiring today. So we need to see, am I getting assigned or are they expiring worthless? So we will take a look at this. By the way, if this is your first time here, I'm Markus Heitkoetter. Usually, I'm joined by my head coach, Mark Hodge, but he is on his way to Las Vegas right now, where we are meeting with our mastermind members next week to trade live. And yes, we will do this show live from Las Vegas, where we will be sitting side by side. Super exciting about this. Anyhow, so Mark and I, we're real traders who trade live accounts, and we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And I just want to get started looking at the overnight action in the E-mini S&P futures. Because last night, here's what happened. Let me just quickly bring up the news. So last night or yesterday, we heard that the Senate passes the bill to raise the debt ceiling, preventing the first ever US default. And markets obviously like this. As you can see, yesterday, overnight, the E-mini S&P kind of up and away. If you look at the move that happened overnight already, we're looking at a healthy 0.5% to the upswing. So that's good. But look at this. What happened here? We have almost a seismograph going on. And this is because of the jobs report that came out this morning. So looking at the economic calendar, we have been talking about this. The jobs report is the big one. Let me zoom in. And there was a surprise creation of jobs. Expected was that the available jobs drop by to 193,000. And they rose to 339,000. So this is where you can see it rose 339, much, much, much better than expected. And this is not what the Fed wants to see. We have been talking about it. The Fed wants to fight inflation, and therefore Powell, the Fed chief, has said several times they need a weaker jobs market. So this is why we had this crazy reaction here at first to the downside, but then to the upside. And if you're looking at the markets right now, we see it is up and away. So how come? Why do the markets shake off what's happening in the jobs report here? Well, this is where we go back to the jobs report. It seems that traders are focusing on the two other numbers. So not only do we have the non-farm employment change, but also the unemployment rate that ticked up from 3.5% expected to 3.7%. Last month for April, the numbers were 3.4. These are the May numbers. So this is where market participants say, oh, okay, unemployment rate is going higher. And the other thing that's super important is average hourly earnings. In April, they rose by 0.4%. Expected for May was 0.3%. And the markets did not disappoint. It came in with 0.3%. So this is showing that inflation might not happen in the job market. Of course, that's bad for everybody who is employed because obviously this wage growth here is not keeping up with inflation, but it's good for the market and it's good for Powell. So looking at what Fed funds traders are expecting this morning, and honestly, after I saw the numbers coming out, I thought that this would flip, that traders would bet on a rate hike in 12 days, 2 hours, 55 minutes, and 31 seconds. This is when the next Fed meeting is. So we are less than 2 weeks away, but no, traders are shaking it off, and they are now expecting the Fed to keep rates at the same rate where they are right now, with a 67% probability versus 33% of raising it. Now, we talked about it yesterday. Next week, the economic calendar is super light. There's not much going on. We will not get any more inflation data. We will not get any more jobs data, as you can see. We only get the weekly unemployment claims, but they're coming out every week, even though they're right now red flag. They're usually not moving the markets. Other than this, as you can see, all of the numbers, all of the reports here are yellow flagged, meaning that there's a low impact on the market. So this is where the Fed has all the data right now that they need to make a decision of whether they raise rates or not. And traders believe that based on the data, the Fed will pause, even though it's only a 2/3 majority versus 1/3 that they will keep raising interest rates. The probabilities here, as you can see, everybody is now expecting that at some point, the Fed will raise rates by another quarter point, going up to 5.25 to 5.5 as a target range. But traders believe not this meeting, and this is what we heard from Fed officials, that they said, okay, we might pause and assess the data first before we get new data in. And again, with the data that the Fed has right now, traders believe they might pause, although this is subject to change. So we will definitely keeping an eye on this and see what's happening. But so far, the markets are on fire. If we are looking at the S&P and a 5-minute chart, we see that right now, after a strong opening and then pulling back a little bit, the S&P is trading at highs of the day at 4,277. And we talked about it, the 4,200 level for the S&P 500, an important level. And right now, the S&P 500 is slicing through it decisively, as you can see. Up 1.3% for the day. The Nasdaq up 1% for the day. And the Dow has been lagging and is now up 1.6%. This might actually save the Dow, because until today, it appears that the Dow would have a losing week. But now, with this strong rally, up for the week 1.5%. Looking at the S&P, up for the week 1.7%. And the Nasdaq now with its 6th winning week in a row, up here for the week, more than 2%. So we will see what happens here for the remainder of the day. Also, if you look at it, the Nasdaq right now trading at levels that we haven't seen since April 2022. So this is actually a 52-week high that we are making here right now in the Nasdaq. Let's see what happens here today if it continues. On the other hand, the VIX, the fear gauge trading at lowest levels that we haven't seen in, I don't even know. Let's switch to a weekly chart and see. Oh my gosh. These are levels that we haven't seen since February 2020, before the pandemic. The VIX now trading below 15. This is at pre-pandemic levels. And as you can see, ever since we came out of the pandemic, or actually during the pandemic, even the VIX was trading anywhere between 20 and 30, spiking to 40. But right now, fear has left the building. And this is where we see this today, the news from the jobs market that traders interpret as good news, and the news that the debt ceiling crisis has been averted is moving the markets higher here right now. Not only stocks, but also crude oil is up above 70 again. As you can see, crude oil has been sliding from 75 down to 67 over the past couple of weeks. Yesterday, crude oil had a great day, up 2%. Now up another 1.9%. So crude oil, let's just see where we stand for the week. Still down for the week, 1.8%. But as you can see, climbing out of the hole, trading above 70 again. Also, natural gas this morning up 2.4%. So this is what is happening in the markets right now. So let's take a look at our positions and see how they are doing here. So heading over to the PowerX Optimizer and the positions that I'm in right now. First is CTRA, Coterra Energy. With crude oil marching higher, also CTRA is marching higher. As you can see, CTRA had a really bad last week and the week before, dropping from 26, this is my strike price where I got assigned, all the way down to 22. I mean, this is a pretty healthy drop. This morning, a rebound up 2.4%. Right now, I cannot do anything. I don't have any calls that are expiring this week. I had calls expiring last week. They expired worthless. As you can see, I collected a lot of premium here. My cost basis is at 26, but my break even is at 22 to 24. So I'm trading well above my break even here. And I'm hoping that CTRA has a few more good days so that I can sell calls again against my 26 position. Also, coming up, On June 9th, this will be next Friday, I will receive the dividend because I still own CTRA on ex-dividend date, which was on May 25th, so last week. So therefore, I get a payment of 20 cents per share. And in CTRA, I have 5,400 shares. So this means a little bit over $1,000 are coming into my account for this CTRA position next week. So I'm not incredibly mad about this, that I still have it. I'm okay with this. GM, General Motors, I sold the 31 put earlier this week. Or was it last week? I think it was last Friday. And I was able to buy it back at 90% of the max profits yesterday because, as you can see, GM rallied yesterday 1.9%. Today, a follow through. So it would have expired worthless anyhow. But my trading plan says, here you can see it, when to enter, when to exit. It shows it right here. Let me zoom in so that you can see it. Close at 90% of max profits until the day before expiration. Yesterday was the day before expiration. So this is why I closed it according to my plan at 90% of max profit. So no more GM in the portfolio. PNC, 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 PNC. This is a position that we entered before the banking crisis hit, and then the banking crisis took PNC Financial Services down because there were concerns about regional banks. It has been trading in this range between 118 and 130, dipped below at some point, came right back into the range over the last few days, earlier this week, going below, outside of the range again, but right now up today, another 3.3%, right dead smack in the middle. We needed to move up to probably 130, 132 before we will be able to sell calls again against our position. As you can see, my cost base is 141.50 and my break even 139.68. So this worked. Go PNC, go and climb out of the hole. As you, this is a position both Mark and I sold puts. I believe it was either earlier this week or last week, can't remember exactly. And I sold the 28 put, Mark sold the 27.50. As you can see right now, SU, Suncor Energy trading at 28.93, well above our strike price. And unless we see a sharp reversal and see dipping below 28, this will expire worthless and we will keep all of our premium. I'm a little bit sad about this. I was hoping to get assigned in SU so that I can sell calls against the position, but hey, the markets are making up their mind. What we do as traders, we react to what we see. We cannot move the markets, at least not traders like you and I. There might be some traders at big fancy Wall Street firms that might be able to move the market. Not us, so we're just reacting and that's fine. So this expires worthless and then I can look for new positions. Also, a couple of days ago, we entered UPS, and UPS, we sold the 160 put. Right now, it is trading at 169.56, so also this appears to be expiring worthless, so not a whole lot going on. At first, it looked like because UPS, when was a couple of days ago on Wednesday, moved as low as 166.30 and seems to keep dropping. So it seemed that, hey, maybe there's another possibility of assignment, and I wouldn't mind owning UPS at all, especially at the 160 level if you look at the chart here of UPS. But again, seems to expire worthless unless there's something dramatically happening in the markets. And yes, dramatically is a word. Between drastically and dramatically, I decided that dramatically sounds really like something really, really bad is happening in the market. If this happens, I still get assigned, but you see, I have right now 5 positions in my portfolio, and that's what I like to have. This is how I like to be diversified. And as you can see, if we look at the different industries here, and I can zoom in a little bit, you see that I have 2 positions in energies. I have 1 in consumer cyclical, 1 in financial services, 1 in industrials. So I believe that this is fairly diversified. And also, if you look then at the, that's actually the sectors. Sorry about this. There's 11 sectors in the S&P 500. And here are the industries. Let me see if I can move in a little bit so that you see the industries. As you can see, I'm diversified right now in 5 different industries. In auto manufacturers, that's GM. In banks regional, that's PNC. In integrated freight and logistics, that's UPS. And then we have also oil and gas exploration. I believe that is Suncor. I have to look it up. And then we have oil and gas integrated. That is probably CTRA. Anyhow, so as you can see, I like my diversification here. This looks good to me. I'm happy with this. And again, next week, I will start over looking for trades. Talking about looking for trades, let's see if there's anything that caught our eye today. Not really a whole lot. Still Oxy available. However, Oxy, as you can see, is up 1.74% for the day. We prefer trading stocks or selling puts on down days because then there's more meat on the bone. There's definitely more premium in there. But if you like to join Warren Buffett, who now owns a 25% stake in Oxy, and say, I wouldn't mind owning Oxy at 57.50, then there is this option available. Let me zoom out a little bit so that you can see it. It's actually here, the 57.50, you would get 74 cents, $75 per contract traded, and the stock could drop another 3% before you get assigned. So maybe that is something that you can consider. Other than this, as we can see, some energy and gas plays today, EOG also, energy, oil and gas, I believe that's exploration. Marathon Oil is available. All of these are good strike prices since I'm right now already, as I've just shown you, in 5 stocks in the first place. And then also looking at the portfolio, I am already into energy stocks. I will pass on this one. Looking at the heat map and see what is happening here in sectors today, we see that today pretty much everything is in green. The only sector here that is kind of in the red is communication services led by T-Mobile, down 8.5%. I don't even know what happened here with T-Mobile. Let's take a look at this stock. And TMUS, I don't know, did they report earnings? No, they did not report earnings. There must be some other news where T-Mobile US is just getting hammered here, down 8.5%. I also believe that we saw Verizon. Let's see, Verizon also down here. So something between these two must have happened. So Verizon, as we can see, if we go here, VZ, the symbol, down 5%. But hey, there's 2 more that I want to take a look at, and one of them is Lululemon. They reported earnings today, up 12.7%. That is a stock that we looked at several times for wheeling, and I have actually traded Lululemon. We're under right now in a position, wish that I was, because up 12.6% on stronger guidance than expected. And then we have MDB, MongoDB, a data developer, up 27%. I mean, holy cannoli, look at this one. And they also reported earnings and they blew it out of the water. Look at this. The estimate was that they're making a profit of 18 cents per share. They reported 56% per share, and they also forecasted a really, really strong quarter for next quarter, so they raised their guidance. This is what we see here. All right, we'll take a look, another look at the markets to see what's happening here, but let me know if you find this helpful. If you do, give me a quick like, especially here since I'm all alone without Mark. I know that Mark is always asking for likes, so now I'm asking you for a like. Give me a like, and then we can compare. Who do you like better? Anyhow, just some friendly competition. Let's take another look and see on a 5-minute chart what is happening. The Dow today still up and away, up 1.67% right now. The S&P trading at highs of the day at 1.3%. The Nasdaq, it seems that the move has stalled, but still trading close to highs of the day. Here up 0.9%. And really the important thing for the S&P is, can we close above 4,200, and can we stay there? Because 4,200 has held as resistance here for quite a while. And whenever we tried to peek out of this, we got smacked right below 4,200. So this year, we shall see. Looking at the moving averages, we see that the 50-day moving average has held several times as support. We had the golden cross back here in February, which means that the 50-day moving average moved above the 200-day moving average, indicating that now we should actually be in an up market. And as you know, in the Nasdaq, we are already in a bull market. Let's just quickly see if in the S&P, we're also in a bull market from the lows that we made here up to here. And we are getting close. I believe that we are with today's move right at the 20%. So we need to see, where is the closing price? The Nasdaq already in a bull market. The S&P might follow. The Dow definitely lagging for today. And look at this. The Dow is not finding any support at the 50-day moving average. The Dow is barely finding support at the 200-day moving average. Last year, the Dow was the outperformer. This year, it is definitely the Nasdaq. So this is what is going on in the markets. And with this, I wish you a great weekend. Tune in on Monday when we join you live from Vegas. And in the meantime, there are a few videos for you. And it's pretty sad to see that Mark is not here. Anyhow, take a look at these videos. Have a great weekend. And then we'll see you on Monday. Take care.